All right, welcome back. Friends don't let friends form SCorps. Why? Well, SCorps are a little difficult to deal with. Even though there's a great benefit up front, you get a discount on your self-employment tax and you can pay yourself a salary out of the SCorp. There are other reasons why you don't want an SCorp. They're difficult to scale. With an SCorp, the IRS puts certain restrictions on SCorp stock where only individuals can own a piece of the SCorp and or certain types of trusts. And everybody has to have the same rights within that in terms of what distributions they get. So you can't adjust and change the types of distributions that people get, so it's less flexible and difficult to scale. It's also difficult to acquire. If a corporation comes and wants to buy an SCorp, they can't because a corporation is not an individual under the rules of the IRS. So it becomes more difficult to sell an SCorp, and you end up having to shift things around and change things and perhaps even treat the transaction as a sale of the SCorp in order to actually sell it. And you might have to sell the assets instead of the company itself. That's all difficult and kind of expensive to do from a legal perspective, so it's easier to just stick as a disregarded or a partnership, even though you don't get that short-term benefit of having that discount on self-employment tax. It's also not compatible with a lot of different types of estate planning vehicles and other types of planning vehicles like trusts. Certain types of trusts cannot own a piece of an SCorp. If you are the grantor of a trust, there is an exception based on one revenue ruling that we use sometimes, where if you're the grantor of irrevocable trust, you can actually own a piece of an SCorp. But it's very narrow in its exceptions, and you have to be very careful because you have to remain the grantor. And if you don't, it lapses and it could actually blow the S election. When we say blow the S election, that means the IRS doesn't treat it as an SCorp anymore, and that's treated as a sale. That means you sold the assets and you have to pay taxes on the gain from the sale of those assets. So blowing an S election is not a good deal and you want to avoid it. That's why when you set up an SCorp, you want to be careful with it. And honestly, in a lot of different contexts, it's really just not worth it. That's why we say friends don't let friends form SCorps, because they're difficult to deal with when you're selling and difficult to deal with when you're scaling. That's all for now.